Meantime, we'll talk about Meta this morning. Despite weakness of softness in the ad market, our next guest keeping his outperform and his 385. Joining us at Post 9 is Oppenheimer's Jason Helfstein. Jason, great to have you. Thanks for coming in. We had a big discussion this morning about whether or not there was enough evidence last night that you could get to $20 in 24. Is that the crux of the debate?
I mean, really, I think it was making people more concerned that if the Middle East turned into something bigger, that would have an impact on advertising. Snap had put that out there, but I think investors didn't believe that because they have some of their own issues. And then to the extent you got a guidance range that was, 13 to 24% growth, that's unusually wide. When pressed why that low end, they did mention the Middle East. And so I think that was just something that investors were not really focused on before today.
Meanwhile, as for the revenue growth and the operating margin, is that a reflection of the hard decisions they made a few quarters ago?
100%. I mean, you look, Reels got to revenue neutral in 2 years. It took Stories 3.5 years. They quoted a 70% improvement on engagement, 40% engagement from Reels, and then a 6-7% improvement on core Instagram and Facebook from AI. So clearly the investments that they're making are driving engagement, and then you can see the revenue numbers, right, obviously coming off of the Apple privacy changes.
So why is the stock down 6%? Is it really all just on this worries about the ad market?
I think it is. If you look at all the other ad stocks today, they're all down, maybe not the same magnitude, but everything connected to digital advertising is down today. And again, Snap said it, there wasn't a focus, Meta said, and I think this was a little bit Powell-esque. I think it was a bit over-talked. I don't think they're seeing it right now, but they're giving themselves cushion just in case things don't, go in a favorable way.
Did you get a sense, and operating expenses came in at least below what many were worried they would hit, and, but cost discipline, is the year of efficiency going to be years of efficiency?
Well, I think the bears were worried about expenses over $100 billion. They're guiding 96 and change. That's where the street was, so they're kind of hitting that. Yeah. And again, historically, they use expenses as a way to kind of manage the earnings. And so presumably they'll chip away and that, they'll come in below 96 next year.
So you think they continue to be focused on efficiency?
I think so.
You believe them?
Right. They did talk about shifting people within the organization, a backlog of hiring, but I clearly think, like Mark, look, this stock is now trading at 14 times 25 earnings, right? I mean, that's a crazy low multiple. And so I think, like, Mark knows what he needs to do.
What I mentioned AI with IBM, breaking it out. What did we learn about generative AI-driven advertising and when that's going to be material?
Yeah, I mean, look, right now it's more like the AI changes the font, it changes the background. It's not creating the digital image yet, but at their Meta Connect Day, they did show a product that isn't live yet that can create an image in 5 seconds. And presumably, that's the precursor to AI-generated ads, maybe back half of next year, but we don't know yet.
We'll look out for Amazon tonight, Jason. Thank you. Good to see you.
Thank you.